So here we are. The markets are right back where they were almost 18 months ago. But the world is really different. The question is, are the markets going to break out to the upside and see another, call it 12 to 18 months higher? Or are the sellers going to come in at this price point again? This is important for retired portfolios and for people who want to retire strong, because if the market does move down another 20% or up another 40%, that could greatly impact what your retirement looks like over the next, call it 3 to 5 years. Stick around, we'll get to that. Hey everybody, RC Peck here with Fearless Wealth. I am in a different location this week. I'm using the camera and the microphone from my computer, so the video quality might be a little bad this week, and the audio too. So also, if this is your first time watching one of my videos, just know that I do have better microphones when I am home, and right now I am not in the Seattle area. We have a lot of good things to talk about. I'm going to really focus on two parts of the market. The market that led us back to new highs. Okay, I want to talk about that one, and I want to talk about the leading sector in the United States, which was lagging for a while and finally caught back up. So let me jump over to screen share so I can show you what I'm looking at, show you the charts, and we'll go from there. Okay, so let me start with this. Let me start with the first chart I want to show you. This is the US stock market. It's the Vanguard Total Stock Market ETF. And there is that rectangle. Okay, so if you go back to the end of 2021, there's a double or triple top for the US stock market. And then it fell about 25% to a double bottom in October of last year. And we've talked about October of last year multiple times, many times over the last 9 months. And now the US stock market is getting back up to where it stopped going up. So I can change the rectangle and kind of show you that rectangle, that kind of that weather storm that the US stock market is getting back into. But it's not quite there. And I'm talking just the overall US stock market. So that's the first thing, just noticing that, yes, the US stock market is getting back up to where the sellers were, but it's not there yet. Now, there is a part of the US stock market that is already there, and that's the technology sector. So it's still the same rectangle. Now, the technology sector fell about 35% last year, not the 25% the US stock market did. But this is what I want to point out to you. It's already back to and testing its old lifetime highs from 18 months ago, where the US stock market isn't. Now, that's not really surprising, because if you've watched the market over the last 9 months, you've known, or the last 18 months, you knew technology led the market to the downside, and technology has been leading people to the upside, which, by the way, is not true. And that's part of what I want to point out here. Now, I said it that way because if you've only heard that technology has been leading, it means you're not getting the whole picture. Yes, you can see technology right back up to its old lifetime highs from 18 months ago. But the real story is that Europe led the lead or the move out. So this is the same period. But notice how Europe, it bottomed in October like almost everything else. But it got back to its old lifetime highs first. It actually got back to its old lifetime highs 2 months ago. And now for 2 months, Europe hasn't done, quote unquote, anything. It's just been kind of working through what's called that overhead supply, or that, that resistance. It's price, the price is getting, hitting its head on the ceiling there. But Europe got there first before anything else did, before Apple got there, before Nvidia got there, before really any stock market got there or any part of the US stock market got there. So Europe got there first. But if you've only been kind of following mainstream news, all you hear is tech, 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 this, tech, tech, tech. The real story is that Europe got there first. It started digesting its gains 2 months ago. So one would expect Europe to break out. And let me show you this last price chart here. This last price chart is simply showing you Europe, which is the blue line, and US technology, which is the red line. And this is the bottom in October of last year. They both bottomed at the same time. Now, here you can see Europe stopped going up right there, basically at the end of April, April 24th. And at that point, Europe was up 50% since the October bottom. At the exact same time, technology was only up 20%. That's pretty amazing, right? That's 2 months ago that Europe itself was up 50% and technology itself was only up 20. Now, over the last 2 months, all of the headlines, technology has gotten all the headlines. And you can see now today, technology from that October bottom is up 42%, and Europe, not having moved over the last 2 months, is up 48%. So the real story is watching. Now, we don't know which one's going to break out first. But watching these two parts of the stock market are important because it tells us this is the strength that let us out. Now, the interesting thing here, and let me get off a screen share, so give me a second. The interesting thing here with Europe leading us out of the October lows is Europe's been kind of down and out really since 2008. And the fact that they regained leadership for the first time in over, let's do the math, 15 years, that's a big deal. And if we see Europe break out first, that really means they've kind of continued to hold the baton and break out. But again, this is the first time we've seen Europe lead the market. Now, Europe did lead the market after the dot-com crash. So they were leading between 2003 to about 2007. So the two leaders are US tech and Europe. And we're right back to where those two markets were 18 months ago. So that's really what we're watching here. The market could easily drop 5 or 10 or even 15% without starting a new downturn. Just simply being, both of those, one's an index, one's a sector, kind of taking in all the supply that's getting, given to the market. But that's what we're watching right now. Let me know where you think I got it right, where you think I got it wrong. If you like the video, if you'd like this video, please like, subscribe, leave a comment. All those things matter to the YouTube algorithm, and it helps this free video get out to more people. Thanks for tolerating the bad audio this week. And the camera in the computer, and probably in 2 weeks' time, I'll get back to my normal setup. Thanks again. And again, if you hear something that you think I missed or you think I got wrong, just leave it in the comments and I will comment back to you. Thanks everybody for being in my world, and I will talk to you next week. Okay, take care.